Welcome back, everyone, to another Friday night market conversations live stream. I'm Jerry Hall, broadcasting from beautiful Costa Rica. We've got a heck of a show lined up tonight and a topic that is sure to be embraced by all. We're going to talk about the investor mindset. We're going to discuss topics like learning as a practice, as a behavior. All of us, whether we're consciously doing it or not, when we're making our investments into this digital asset space and we're contributing to conversations on Twitter or Facebook or commenting on YouTube content, we're engaging in a process of learning. This has been such an incredible journey for me, and I have a guest on tonight. That's Mr. Crypto Ice. Is a young man I met from our interactions as he was interacting with me through my YouTube content and has since transcended over to Twitter and Facebook. And now we're even talking offline. We've exchanged phone numbers. Really neat guy. I think you're going to like him a lot. Let me just take a minute right here as I go through the chat and I see Bill. Hey, welcome, Bill. Nice to see you. Dakota, welcome aboard. Really nice to see you here. We got the Doodler. The Doodler made it tonight. Corey, nice to have you, man. And Ray, nice to see you. Thanks for coming. So let me bring in Crypto Ice, and we will get this party started. So Ice, how you doing tonight, man? Good to have you aboard.
Hey, Jerry, thanks for having me on.
Nice to have you. Look at that. Mr. Jungle Inc. Jungle, so great to see you, man. I don't know how many of you know this story, and Ice, I'll tell you this. Right. My introduction to being on camera and talking about my favorite digital asset, XRP, was a direct result of Jungle Inc. making a Twitter post saying, does anybody want to talk about XRP tonight? And I was right there. I said, yes, I want to talk about XRP. And we got on and did a Facebook live thing. And it was really, really fun. And I enjoyed it. And I believe that had to be January of 2019. And then,
wow, I got you started.
Yeah, 10 months later, somebody showed me how to do Zoom and record a video. And the next thing you know, we're doing Friday night live streams and talking to people about the investor mindset. And pretty incredible stuff, huh? Yeah, yeah. Oh, Dakota, thank you so much for the $9.99. I think those are called super chats, right? Thank you very much. Alexander, welcome to the show. Wade, welcome to the show. And Fire Marshal Bill. So, Ice, let's get into what has been, okay, so there's the concept of making an investment. And so you've made an investment, and that's really wonderful. What has been the driver for you learning? Because it's one thing to put some money into something and walk away. It's another to put some money into something, and now all of a sudden you're engaging on Twitter, you're all over Facebook, and you're making really cool videos on YouTube. What drives you to do that?
Honestly, when I first got into this, a friend told me, and I was like, okay, I'll throw a little money at this. And once I actually studied it, I was like, wow, this is much bigger than I thought. And the more that I've studied, and I'm sure you had the same experience, it just keeps getting bigger and bigger to the point where I'm like, I have to tell people. I told my family, I told my friends. It got to the point where I was like, I might as well make the videos, and that way I can just tell everyone that way. I feel like it's a movement. And, I got about 40 to 50 people signed up, newcomers. They may not know a lot about the space yet, but they're going to get financial education of a lifetime when this goes off, right?
And one of the things I have found that has been so incredible about this community, whether it be Twitter, Facebook, or YouTube, the engagement and sheer like enthusiasm to share a lot of times very, very good information. When I first came to this space in February of 2018, I found Jungle Inc.'s channel, and just the way Jungle kind of brought up the news was one thing, but there was an excitement and an enthusiasm in his voice. You could tell he was excited to be here. And I'm an older guy, and I remember so vividly not participating in the cellular revolution, not participating,
Right.
as an investor in the internet revolution. I just kind of went to work, made money, and had fun. And I looked back this time and I thought to myself, I'm not missing this revolution. And then, I'm in, and here I am. So let's talk about what you've learned along the way, because I know you shared some stuff with me. I remember we had an incredible phone conversation and you brought up Kobe Bryant. Mm-hmm. So I'd like to just dive into how do you feel, being in this space has broadened your intellect or financial IQ as it pertains to being an investor?
Yeah, so that's a good example. Like, I'm into sports, and so I break down all investments and sports analogies. And I think Kobe's the perfect example of someone that's willing to put in the work, right? That's what he's known for. And when he took a last game winning or losing shot, he had practiced that shot 1,000 times in practice, the same way he was going to shoot it, the same move. And I think it's the same thing with our investments, right? When we need to have that muscle memory, because when this thing takes off and it becomes so big that people are controlled by greed and fear and the emotions of it, if you've rehearsed it in your mind and it's like muscle memory, then you can execute your plan, right? And so that was my thing, was you spend all this time focusing on your investments, but you don't do the inner game of mastering your wealth, then you might sabotage everything. So I love the idea that you have to master the inner game of wealth. And I had to reset my financial thermostat. For me, as a social worker, I had to change the thinking that money was not that important. I kind of had that attitude for a while, and I missed so many opportunities because I had that mentality of like, oh, I'm just in the business of helping kids. I can't make money. And then once I made that switch, the universe just opened up to me. Like, money and opportunities are everywhere. So I just think that, people that don't have that poor mindset, there's always obstacles. It doesn't matter if you get past this one, there's always another one. And I think people with a wealth mindset, all they see is opportunities. And so that's kind of what I've gotten from T. Harv Eker, his book, The Secrets of a Millionaire Mind. That really sticks with me.
No, that's wonderful. I often am trying to always relate what I'm hearing to my own either life experience or perspective. And as you were talking about that, if I just described my circumstance, right? So the last 2.5 years, I've lived on approximately $350 a month. There were times where it was tight and it was only top ramen or beans and rice. And I look back and I think, but I've never felt poor. I've never felt downtrodden. Matter of fact, my circumstances are by design. I designed my circumstances so that I could live through the bear market however long it took. And if it, obviously when you get into this space, I was hoping that December of 2018, there would be a repeat of the December of 2017. Didn't happen.
Right. Mm-hmm.
December 2019 rolled around. Guess what? It didn't happen. And I can't say with any high degree of probability that it'll happen December of 2020. And you know
I
what? I'm
know.
okay with that. I'm really okay with that because I, like you, I continue to practice the game of how am I going to deal with the wealth that I do know is coming. I don't know when it's coming, but I do
Right.
know that it's coming. And that's one of the things that have really gravitated me to you is I love that part of you. You're talking about these things on your channel, you tweet about them, and we've had some really good phone calls where it's like we're practicing it. We're talking about strategies. And one of the great things
Right.
I love about you that I'm trying to adopt for myself is with new information, I'm willing to change my mind or how I thought about something. You know what I mean? Like I can
Right.
be,
Yeah.
you know, I can be thinking this, and if I get new information, I'm willing to go, you know what, maybe my thinking last week wasn't correct.
Yeah. I think
You
part
know
of
what I
that
mean? I'm
comes
really
from.
open to being wrong. And oftentimes I'm not. No.
Yeah. I mean, I know you have a lot longer financial history of doing things, and so me coming in, so many people in this space, it's the first time they've really invested in anything other than like a 401k. So I'm kind of in that category where I'm fresh. I've known some things, but man, I've just had a chance to get the learning curve over the last 2 years. Such a blessing.
It is. It is. I'd like to take a second. I want to welcome Alexander. I want to welcome Gabriel and Stephen. Great to see you back. One of the things that we were talking off camera, folks, that I thought would be great to introduce on camera now is this thinking that there is no one size fits all exit strategy. There is no one size fits all investment strategy. It's really about trying to understand principles and applying best practices. And if you do these things, construct, tear down, that's the practice. That's like going and taking those shots before the game bell rings, right? And so you were
Right.
talking about, I had shared my experience, and I'll tell everybody who doesn't know. Hi, Susan, by the way. Nice to see you coming in from North Carolina. There was a time in the dark days of the very end of 2018 where I took my XRP and I borrowed against it on a Nexo platform. And I bought a Bitcoin because it was $3,500, and I bought some more XRP because it was 25 cents. Now, generally, that's not a good idea to borrow against your holdings with no plan to repay it.
Right.
I have hope, but no real plan. If the market continued to go down, I was in a lot of trouble. But the market did pick up, and I sold the Bitcoin and bought a bunch more XRP. And luckily, some other things have happened. But it was through that conversation that you brought up what you did. And I would love, if you wouldn't mind, sharing with the audience a strategy that you thought through, and then you've executed it. And I think that everybody should take time to walk through processes, and when something is right, to execute. So if you wouldn't mind sharing this one particular investment strategy you came up with, I'd love to have you share it on air.
Yeah. Over the 2+ years that I've been in the bear market, I've had a lot of time to think, and so it was kind of something when XRP went to 20 cents. You remember that time?
I've felt it, yeah.
I I was exploring at my work whether I could even take a loan against my 401k, because quite honestly, I have very little faith in a stock market that is overinflated, right? We talked about how you really just want to buy distressed assets. And so I am convinced to the point where if you look at Warren Buffett, who is one of the people that I look at his sound principles, If you look at the margin, the margin between the value and where it's at in the stock market, how much higher can it go, right? You look at an emerging market like crypto, and the margin of safety between where the prices are now and the real value, I believe, of XRP and VeChain, it just seemed like a no-brainer. So I went and explored with my work and was able to take half of my 401k and loan against that. And it's going to be like the tale of two 401ks. I have to leave half in, and half of it's in crypto, basically. And so I'm really betting that the crypto one's going to be the better one a couple of years from now. But it just was a good. I sleep well at night just knowing I was able to do that, because that other half I'm just not going to be able to get out, and I'll just have to take it with the stock market right now.
Now, can I ask a few questions about that? Do you mind?
Yeah, that's fine.
Okay. So when you were borrowing against your 401k, you're basically taking a loan that you're going to have to repay yourself. So the total of your 401k didn't change. You just took a loan against it. And it was that loan that you decided to get into some of these distressed cryptos, I'm assuming, right?
Yeah.
Okay.
Right.
Now, you're not able to put those cryptos in your company, or I'm assuming if you're a social worker, are you working for the state or are you working for a private entity?
Private entity, but
okay.
No, I wasn't able to put it into company 401k.
So you're just holding it. You're holding it on your own.
Right.
Okay.
What you were discussing though was you should share that.
Okay. Well, that's what I thought I would bring up. So this is, other than the exact information which I'm about to roll out, I think the value is that two people that trust each other having a conversation led one to discover something that maybe on his own he wouldn't have. Is that fair to say?
Yeah.
So
very fair.
when Ice and I were having this conversation off camera about his 401k loan, I asked him if he had considered taking the crypto that he had acquired and moving it into a Roth IRA. And the reason I said that was because of two factors. One, he's still such a young man and has so much time before he reaches the age that he can start to withdraw out of an IRA account, right? And the fact that a Roth IRA, you can get your disbursements out of the account tax-free because you paid the tax going in the front side. Every XRP that you get into a Roth IRA today at a valuation of under 30 cents, in 18 years from now, could be staggering the increased valuation. And even though you're only able to do, I think, up to $6,000 or $7,000 a year in a Roth on a Roth IRA from your contribution, the point is you can get a lot of XRP or VET or whatever the Roth will hold today. You can get a lot of those coins in there. And if they appreciate like you believe they're going to appreciate, you could be sitting on a staggering retirement account. You know what I mean? So I encouraged ICE to investigate that, whether it be through a local entity that provides IRAs, or to even reach out to like an I Trust Capital. I know a lot of people in the crypto space have been saying good things about them. I don't know them personally, but it may be definitely worth investigating, because I mean, can you imagine if you did that with Amazon stock at $2 a share? You were able to get $6,000 a year for a couple of years while it was at $2 and $3 a share, and you come back to it 18 years later when it's $2,600 a share. You know what I mean?
you wouldn't be tempted to touch it, right? It would be that.
Well, you can't touch it. It's not about tempting. So. You're protected from yourself.
Exactly.
So I think it's something that everybody who's looking at long term, right? Long term. It's one thing to say, I'm going to put $10,000 on this asset and I've got a 24-month window or I got a 36-month window. But if you're talking about long term, then there are things that we should all be thinking about. We should be thinking about Roth IRAs. We should be thinking about trusts versus, individual asset management or ownership. Protecting ourselves. These are all things you learn as you go through this process. And let me just take 1 second. I want to say hi. I saw P. Kelly come in. Hey, P. Kelly, Barbara's here. I did a text shout out to both Ashad and Lori. Nice to have you guys in the stream tonight. This is a time of the show where I want to encourage each and every one of you, if you have any questions for ICE or for myself about any of the things that we're talking about. If not, we're just going to continue to blabber on about the exciting time that we're in, because truly, I don't think anybody, unless you had a bunch of skin in the game in the internet boom, it's hard to emotionally put yourself there. I mean, we can all look back and go, okay, we know that happened.
Right.
We know pets.com went to zero, and we know that Google and Amazon have gone to rule the world. Right?
Mm-hmm. Yes.
But if you didn't have any real money in the game, it's kind of antithetical. Okay, it happened. It's like reading something out of a history book. But every single day, we're living through this.
Mm-hmm.
I mean?
Yeah, nothing teaches you like some skin in the game.
Right. Bill asked a question. He says, ICE, what other projects are you in or interested in besides XRP and VET?
So I really do have that kind of mindset that you have a lot of eggs in a basket, or you can have a few eggs and watch them very closely. And I'm very in favor having a few eggs and watch them closely, because so besides XRP and VeChain, the other one that I have is Icon. And I think Icon is actually one that people are sleeping on a little bit. They have the backing of the South Korean government. They have a lot of things going for them. Do I know that one as well as XRP and VeChain? No, but that was one that I invested in early on. And I kind of did the first month in crypto. I just invested a little bit into a lot of coins.
Okay.
I didn't really, just learning the space. And then once I studied and got the learning curve, then I figured out which ones I really felt had the value and consolidated. So.
Right on. I want to welcome MS, and I see John Turco is here. Hey, John, nice to have you folks in the stream. I said earlier, and I want to repeat it again, there's no one-size-fits-all strategy. Everybody is a unique individual person, and there are things that make sense for you based off how old you are, what your goals are, what your plan is, all these kind of things. Like, for instance, a young man on the stream, Wade, I love Wade. Wade put a comment that Rockefeller, right? Rockefeller, we're talking about Rockefeller. We're talking about Standard Oil. I don't know if any of you guys understand the history of the United States, but pre-industrial revolution, there were some guys that made a tremendous amount of hay. Carnegie in the steel business, Rockefeller in oil. I'm forgetting the Vanderbilts with the railroads. I mean, talk about generational wealth, right? These families represented that. Well, Wade put in a comment in the stream that Rockefeller didn't diversify out of oil until he was filthy rich.
Good point.
And that makes a lot of sense. That was the strategy I took for XRP. I looked at the crypto space as a whole. I knew I only had X amount of dollars.
Mm-hmm.
I'd already retired. I had a tiny little stipend each month, and I was willing to live the rest of my life basically poor and on organic farms. I was just
Right.
totally okay with that. And then the crypto thing came around. I went, whoa, 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 whoa. This is a shot. This is a shot. I've got a shot to go from being content and poor or being content and filthy friggin' rich. And I just made a choice. I said, I'm going to shoot for the filthy friggin' rich part. So I put all my eggs basically in the XRP basket in the beginning. I've since diversified as other funds have become available throughout my life. But that thinking is that if you have identified a winner, that's more valuable than spreading your money around and hoping something that you don't know that much about wins.
Right. I feel like that there's kind of a misnomer of that's less risky to put it over like 20, 30 coins. I subscribe to what Warren Buffett calls diversification, right? We don't just diversify just to diversify.
Right, exactly. There's two different, there is and it's interesting. I'm re-kicking off my Beyond Wealth series, which if you folks are new to my channel, I have playlists where I have interviews in one playlist. I have a Beyond Moon thing I did with Cryptopolis where we talk about wealth building and wealth strategies and exit plans and this, that, and the other thing. Well, I'm re-kicking that off again, and I recorded an episode with a subscriber today who's 45 years old, Mr. X, and I think I'll publish it tomorrow or Sunday. And it's really about, we're just kind of going through and bouncing some stuff off each other about his plan, his exit strategy. And I was able to bring up a couple points that he wasn't thinking about. And he actually helped correct me in a legal process that I had backwards in my head. You know, you learn a bunch of stuff, and sometimes this file gets placed over here, Anyway, it was a really good show. I'll put that on, and I'm going to do that with a bunch of different demographics. So I have a show lined up for Sunday. I've got a young lady in her 20s, brand new investor. Going to record an episode with her. I've got a 30-something lined up. I'm looking for somebody over 60. If somebody wants to come and talk about their quote-unquote crypto exit strategy, I'd love to record our conversation so that maybe the world can benefit from it. But Jerry, there's a question right here for you. Did you see this? Let me throw this on the screen. You see that?
Okay, yeah. What is ICE's cash out crypto retirement plan? Ooh, great question, Bill. You know what? I really love that Rockefeller quote that the other person said, because that is my plan. Is I want to ride this crypto wave for a little while, and I feel like because the stock market and frankly the real estate market is overvalued, in my opinion, I'm going to kind of ride that until the stock market and the real estate market take a dip. And then I'm going to buy those distressed assets. So that'll be my point of diversification, is when I feel like the XRP, VeChain, for example, are going to go up. And at some point, those other markets can't always be all-time highs forever, right? So when that happens, that'll be my time of diversifying as part of my retirement plan. Like you said, I don't plan on with 2 eggs the rest of my life, right? I'm eventually going to diversify in some other areas. So
no, I think that's wonderful. And the truth of the matter is, like, this crypto space has led me to learn, to gain some financial literacy. And I'm no expert by any stretch of the imagination, but I am far more learned now than I was when I got here. And yes, the headlines say that the stock market is at all-time highs, but the truth of the matter is that there are 5 companies driving all-time valuations in the stock market, and there are plenty of distressed assets right now.
now.
right this
No.
second. You know what I mean? And have been. So, you know, the concept of building wealth and the concept of preserving wealth are different, and they do require different strategies and different mindsets. And the wonderful thing about being in a community like this, where, well, even on shows like this, you know, where folks, we can come together, we can share our ideas, and with a little bit of digging and a little bit of research and in bouncing stuff off each other, we can hone something that really works for us. That's
You're
the
right.
beauty of a community, right?
Exactly. Like, you know,
Yeah.
like I had a conversation with you, Jerry, about passive income. And it's one of those words we always throw around, but right. But then you challenged me and said, well, okay, take me through the steps of getting to the passive income. And that's next level, right? Like, okay, what bank are you going to put it in? What exchange? What percent return are you looking for? You know, those kinds of things. So I don't have all that figured out, because I think part of it too is we're going to have financial instruments and investments that we don't even know about yet. So we have
Right.
to factor that. But yeah, I agree. So
You know, Lori brings up a great point here, and I know she's not this is not a question, but this is a very, very important statement for a lot of us. And I fall into this category, so I'm going to bring it up. I have a long way to go and a short time to get there. How does that change the strategy? Still bullish on XRP. Lori, this is what I'll tell you. I think you and I are in the same boat here, young lady, and that is I think I don't know if I'm going to live to be 100, so I don't think I got another 50 years ahead of me. And I would really like to enjoy my mature years in style. So I've consolidated the majority of my assets of my money into assets that I believe have the largest percentage gain probability. So for instance, I believe XRP, because of its use case, because it's not trying to displace the world, it's just trying to make what we already do better. Now, yes, Swift will be displaced, but banks won't be, laws won't be, governments won't be. Okay, I think that has a chance for adoption. And so far, they've kind of done what I expected them to do. I was hoping the price would go up, but that doesn't mean there's any less value. So hopefully within the next couple of years, that will provide enough capital for me to now get into vehicles that pay me to do them. Now, it might be XRP. Like you said, we don't know what new investment vehicles are going to come down the road. Maybe this Flare network becomes something where I utilize my XRP to derive a revenue stream, an income that will pay me, right? We don't know that yet. And I'm not saying that it is, folks. I'm not saying Flare is going to be a retirement plan. I'm just saying I agree with ICE. We don't know what's coming down the road, but we do know that there is a financial world out there. There are capital markets where there are companies that will pay you every 3 months or every month or every 6 months to own their stock. And some of them are strong enough and built well enough and managed well enough to be continuing to be in business for the next 20 years. Right?
Right.
So now it's just a numbers game. You know, how much do you need every month to live the life that you want? And then work backwards from that to find assets that will provide you an income to live that life without touching the underlying capital. So, and if the underlying capital continues to appreciate, which everything does because of inflation, right? You either appreciate or you depreciate and go to zero. It's not a lot of stagnation as it pertains to assets. That it's only in waves, unfortunately.
No, it's a great question, because, you know, you may think that you're far behind, but really you're ahead of 98% of the world still. So no matter what you are right now, you have the awareness to be here. And instead of having large amounts of cash in the bank that's going to deteriorate, if you're putting some of that into crypto, I'd say you're ahead of the game to a degree.
I'd agree with that. You know, one of the things I found was really interesting, and I got this from Real Vision. I watch a lot of Real Vision because I understand and relate to an Austrian economic, thinking as it pertains to what's best for economies. And I really appreciate a macro view, looking at things from 30 miles above and going, okay, there are a lot of moving parts in the world and this affects that and that, you know what I mean? Kind of it's challenging to think that way. Well, what they were talking about in one of the episodes I was watching today is that, as you said, this inflated stock market, right, it's actually still, believe it or not, still being driven by two factors. One, corporate buybacks. Those big five companies that we talked about, they're still buying their own shares. And the other is the 401k metroplex. All the people that still have jobs and are still on a monthly contributing basis, not only from themselves, but their employers, putting money into these index funds. These index funds are a huge basket of companies, and therefore their stocks get purchased. So more stock, higher price. Okay. That is how that game works. And that is why, even despite revenues down, cash flows down, debt accelerating, why the stock market continues to go higher and higher and higher is because the drivers are the corporations themselves are buying their stocks, and the 401ks and the pension plans are still buying equities at record numbers. Right. And until that stops, the merry-go-round doesn't stop. But the musical chair game will stop. I don't know when.
Yeah.
But at some point.
Once that confidence factor gets lost, right, and people decide to not invest in those 401ks anymore, like myself. So.
No, I think that's great. And the fact that you still have one. Now, I'm curious. Guess what? Guess what, ladies and gentlemen? We have ready in the green room right now, ready to come on and share the screen with us, a new investor. Now, this is a young lady that was contributing in the live stream of my shows for the last, month or so, and invited me to join her Instagram live show. And she interviewed me and asked me questions. And I found her to be very interesting. She's an avid learner. She's a new investor. And so I'd like to welcome on screen with us, Bitta Avenue. Hey, Bitta.
Hi, everybody.
How are things going, young lady?
Very well. I'm very surprised that it's Mr. Jungle Inc. that's with us today. I'm a big fan and a follower.
Jungle is the man. Why would you be surprised? Why would you be surprised that superstars would come and watch my show?
No, you said a YouTuber, so I wasn't expecting him.
Well, Crypto Ice is the YouTuber I said I would have on the show.
Well, I didn't realize. Is that not the same person as Jungle Inc.?
No, Crypto Ice and Jungle Inc. are two separate people.
All right. Well, my mistake, because I follow Jungle Inc., so I thought that's what his channel was.
Yeah, no, his channel is actually, for all you ladies and gentlemen that are watching, I would suggest go, if you want to help support an incredible young man who is just an incredible member of the community, on YouTube, it's just Crypto Ice.
All right.
Am I right? I can't get this darn thing to format the way I want it to format, so I'm just going to do this. No, I'm not going to do that. I'm going to do this. Can everybody live with this visual format?
I think so.
All right. I can also do this. This will save everybody. Check this out. How's that? And you have to see my old ugly butt. I'm kidding. All right. So hey, Bitta, you've got You got Crypto Ice in the house. You got an incredible panel, literally in the live stream. I mean, between Lori, Bill, John, Ray, Wade, Stephen, Bill. I mean, Alexander. There's so many people here. Do you have any new investor questions that you want to pose to either me, Ice, or the stream at large?
Yes, I do. Well, I guess my audience is mostly very new people to investment. So like the biggest question, which is like the most basic, is why even invest to begin with? Like, what does that even mean to invest? And I think I kind of want to get like your take on what that even means to you guys.
Sure,
Why
sure.
do people have to invest, or why do they need to invest?
Well, I would say, I don't know if you need to, but if your goals or desires in your life would require more capital than you're able to generate working by the hour, then thinking about having money make money instead of your time making money is a thinking shift. It's a paradoxical change. And a lot of people will tell you, if you're spending your time making money, then there's only 24 hours in the day. You're limited. You have a cap, a limit, because there's only so many hours in the day, only so many days in the week, right? Only so many weeks in the year. If your money is making money, that can go to infinity. There's no limitation. The only limitations are the vehicles you put it in and the methods that you deploy it.
All right.
You know what I mean?
Yes, I do. And I don't know what you guys invest in as far as outside of the crypto market. What do you to invest in that you would think that other people are looking into, like especially a young investor who's just coming in? What advice do you have?
Well, I say everybody should have a desire to learn. The number one investment any of us can make is in our own education. And I don't mean going to a university and sitting through hours of Econ 101 and English 4A. That isn't what I mean. I mean taking these tools that are freely available, the internet, whether they be YouTube, whether they be websites or blogs or whatever, but investing your time into learning. That's the number one investment anybody can make. It's the value is it's unlimited. Number one. But number two, dollar investments, money investments. When you're young, the number one thing you have going for you, your most valuable asset, it's called time. Right? When you're young, you have time. If you have time, then you should learn about compounding interest. It is probably the most powerful financial principle on the planet. So learn about it. What is compounding interest? Well, I'll give you the quick definition. If I put my money in an asset that either pays me some interest or a dividend to own it, and I take that dividend or that interest and I reinvest it into more of that, then over time, the compounding effects not only grow the number that I have, right? So if I started with 5 shares and at the end of 30 years, now it's 830,000 shares, there's that, but there's also the capital appreciation over time. So if I bought those 100 shares at $5 each, but after 30 years, now each one of those shares is worth $56, you can see the exponential wealth accumulated. And it comes from compounding interest. And it's actually very easy to learn how to work a compounding interest calculator. So you can play with numbers and create strategies and processes and plans without ever having to put $1 into anything. Learn about it and then go find the assets that will, allow you to do those things. and apply those principles. Does that make sense?
Yes. Yes.
Ice, jump in, bro, anytime.
Yes, I agree. Sorry, it kind of cut in and out for me, but yes, I agree. Like, especially in this emerging market, you're catching a market that's the first asset class since the 1600s, the bonds market. I mean, this is a once in a lifetime opportunity where you're catching something at the very beginning. Imagine catching the stock market at the very beginning, and you start to see this thing can become, you know. So I think that that's the biggest, what do you want to say, things that people get when they first come in is the power of compounding interest, and the power of just buying and holding rather than being a trader. So many people think they come in and trade and they don't have the experience to do it. If you don't, my personal opinion is, if you don't have the experience, be a buy and holder, and you'll probably do much better.
So
Do you agree with that,
how important do you guys think your mindset is as far as investing is concerned, especially in the crypto market? I know in trading, your mindset is definitely very important, but how does that play into investments?
Go ahead, Ice. I'll follow you this time.
Oh, say that. I couldn't catch the last thing. Could you tell me?
How does your mindset play into how you invest? Your mindset is very important when it comes to trading, but how does your mindset play into your investments?
The mindset plays into it because we all have this relationship with money. So if you, it's so subconscious. Like, for instance, if you believed that rich people are greedy and you're trying to make money, you're working against yourself, because once you make money, you have this opinion that you have to either let go or you have to accept actually everybody is just, money is just a tool. It can be a tool for good or not good. And so you have to let go of some of those thinking errors and beliefs that will really limit your to make money. You know, one thing that comes to mind is Jim Rohn. He's one of the great philosopers out there, right? He says you can either take a teaspoon to the ocean, or you can take a bucket. So if you have awareness, the bucket and not the teaspoon, that's what I would do.
Right.
So.
You know, mindset. When you ask that question, now keep in mind, I'm framing this in the context that I'm talking to somebody either in their late teens or in their 20s, a younger person. Okay. Mindset is kind of thinking about, okay, what am I doing today that's going to benefit me next year or 5 years from now, right? So for instance, and I can tell you, I did not have this mindset when I was younger. I have it now. And that is, boy, it sure would be nice to go and have a $14 hamburger and, buy, I don't know, a glass of milk with it or a soda, and walk out of there with, a $20 tab. Boy, that would be so nice to go have that for dinner. Or same thing. I'm hungry. It's time to go to dinner. What if I spend $3, make myself an incredible sandwich, have a glass of water? I just saved $17 that I could put towards, that could become $100 a year and a half from now. That's $17. If I didn't spend it today, maybe it could be more for me tomorrow. You know what I mean? That's a mindset. How I interact with value transactions today will affect down the road. That's a mindset. And I have that. in my life as it pertains to being a consumer, and I have that in my life as it pertains to being an investor. I don't trade. There have been too many times where the signals on the charts tell me the wrong thing and I've made the wrong move. So I don't trade. I am a holder because I found projects that I believe fundamentally have value, that have the right kind of business or leadership team behind them, and enough sentiment, a community, momentum, whatever you want to call it, behind them. So at least my thesis has been confirmed. Now, some people could call it confirmation bias, and that may or may not be a good thing depending upon the context. But the point is, I look at things that I believe are solid, that have legs, that solve problems, and have the right people behind them to make them happen. And I've put my money down. And now it's time to just sit back, continue to learn about other things and prepare myself. But yeah, you're gutsy. You're young. You can afford to make mistakes if you want to go do some trading. I'm too old. I can't afford to be wrong about tomorrow. I could, you know what I mean? I don't think I'm wrong about 5 years from now, but I could easily be wrong tomorrow. And that's the difference between holding and trading. They're two totally different places.
Right. Well, for me, I think the way I used to look at it before was, if I was to buy something, I said, well, how many hours did I work for that? Or how many hours do I have to work to earn that? But I switched from that way of thinking about it to, well, if I can use the money to invest in this instead, it will grow down the road. Like, that's the transition I went from the past 2 years, is from, it will cost me this many hours to buy the shoes or to buy this, to, well, if I put it in this investment instead, in a few years, it's going to grow into something else. So that's completely a big transition for me in the past 2 years. So that the mindset definitely works. How do you guys, well, for me, because I'm from a different culture, we don't talk about money. We don't talk about investment. It's sort of like not a taboo, but we just don't think about money the way Americans think about money. And it's, do you talk about money in your household? Growing up, did you have conversation about investments with your family? Is that part of how you grew up? Like, how's that different?
You want me to go first on this one, Ice?
Okay.
All right.
Yeah, so go ahead.
How
did I investments? My dad in the 401k. He did very well in the the 90s and the 2000s, and so I grew up just knowing that well for my, but I didn't personally invest in very much. I haven't always been a am now, so more of I just kept my money, I spent my money, and it was much later in life that I think the 2008 crash is what woke me up, and I was like, oh, take a more serious look at my money and my decisions. That was the game changer for me, and from then on, I was like, okay, I gotta have a strategy for my money, because I can't just trust that everything's gonna work out. So
I'll tell you, I came from a single parent home, my mother, but she was always interested in things like that. She had an investment club with her friends. And I remember when I was 14 years old, we walked to Bank of America, and there was a Charles Schwab guy inside our local branch of Bank of America. And I had made $200 saved up from working that summer. And I bought PG&E stock, which was a utility company that paid a dividend to own it. And I checked the box for dividend reinvestment. And in my brain, because the guy had told me if I don't do anything after 30 years, now keep in mind I'm 16, after 30 years, that it could be, something like $30,000-$40,000. Well, this was in the in the very, very early 80s. And I thought to myself, well, I don't ever need to do anything ever again. I just let it marinate and do its thing. And I'll come back in 30 years and have this big old boatload of money, right? Well, it didn't really work that way. The reason being is, number one, if you don't monitor your investments, things can happen. Two things happened to me. Charles Schwab lost track of me. I moved too many different places, and life wasn't digital back then. There were no cell phones. There was no internet. You mailed things. And anyway, they lost track of me, and they gave my assets to the state of California because they couldn't find me. Other thing.
That sucks.
Well, it happened. But also, PG&E had some problems in California, and at some point stopped paying dividends. So it taught me a few things. One, monitor your investments. Be willing to review your portfolio and make changes as you need to, and also keep in contact with the people that are custodying your money or your value or your assets. Make sure they have your email addresses and your phone numbers and the information they need, because guess what? If they can't reach you, they will turn your property gets turned over to the state treasuries. That's how it's called, unclaimed property. If they can't find you, they have to, it's by law, they have to turn this stuff over to unclaimed properties. And each state has their own department of that. Big lesson learned. But that was my thing. I didn't put thought into the future. I was always able to make money. Somebody always wanted their house built, deck painted, bathroom remodeled, whatever. There was always a way for me to make money. So I never thought about getting old, and it just never occurred to me. You know what I mean? It was just never a thought until you get old. And here I am, I'm old. Uh-oh, what am I going to do?
Time just flies.
It does.
I mean, from the time when I was in my, late teens and early 20s, I thought, 10 years was such a long time. But then I closed my eyes and I blinked and I'm 30 something now. It's like, what? How did that happen? Like, what's going on? So you start thinking about, well, I guess 10 years is really not that long of a time. So you're going to get there eventually if you're still alive. So might as well start doing something about it now. But the other question I have is, as far as everybody says, diversify. So would you suggest like diversifying within the same class asset or different class assets?
Ice, go first.
Say that last sentence. Sorry, it's kind of cracking up a little bit. That last part.
Would you suggest diversifying in different class assets or within the same class asset?
Okay, would I diversify in different classes, basically? Yeah, I think in general that's a great idea. Although right now I'm having a very difficult time doing that. Just on principle, if the stock market is so high, I myself to invest and have a specific stock that's distressed. I just can't do it. So I'm kind of more, I have a little bit of time to go for this. And so because the crypto, that one that seems right now, that's, I'm putting my focus. But yes, I think ultimately that's the goal. I think it would be smart to have that as a goal of, I want to have not all of it in one asset class long term. You definitely want to spread that out to another market.
I think there's no one size fits all answer to any of these things, Bitta. So it's important to keep in mind what you want to get. So for instance, what are the advantages of diversification? Well, It's spreading out risk, right? It's taking risk and spreading it out, bringing the overall risk down. Because the chance, if you've done your homework and you found 5 incredible projects and decided to disperse your capital into those 5 projects, and they're all on paper and through your research and everything you've done, they all should succeed, then the chances of them all failing is much smaller than if you put all of it into just one of those companies. So that's the advantage of what they call diversification. Here's the disadvantage to diversification. If you only have a certain amount of money and you've identified 5 things that you would like to put your money into, you only have a certain amount. You should take the project that you think is the best, the one that is going to succeed, and put all your money on that. And so when it does succeed, kabammo.
Right.
You know what I mean? Home run time. So those are really good questions, but they require very long-winded answers because there's no, diversification might be better for me once I'm rich, because now I'm talking about wealth preservation. Right now, though, I'm about wealth generation. So I've taken my little bit of money and I've chunked it into several projects, heavily weighted XRP. My next heavily weighted is Cardano, Bitcoin, Ethereum, VET, and Stellar. But the concentration is at the top 2, XRP and Cardano. Those are my 2. I believe those are the strongest plays for the most percentage increase. So let's say you only had $50. You're never going to get another dollar in your whole life. It's the only $50 you're ever going to get to invest. Well, maybe chunking it down on Bitcoin because it's got market recognition. It's got the largest pool of liquidity. It's got the most marketing and the most people talking about it. That might be the safest play for $50. And it might double in the next 2 years. And it might triple in the next 10 years. But if you take that $50 and you put it into XRP, for instance, its chances of success to Bitcoin, looking at the dynamics right now, are less, but its percentage increase in value that it will return you on your $50 is so much larger, because the difference between 0 and 29 cents is this much, right? But the upside is infinity. Bitcoin is at 11,000 something dollars. The difference between $11,000 and 0 is huge.
Yeah.
You understand what I'm saying?
Right.
So, but it has the same top side, infinity. So my downside risk on XRP is much lower because you can't go below 0. 29 to 0 or 11,900 to 0.
Right.
It's a no-brainer.
That's one of my considerations when I buy or when I invest into certain money is, well, if I could have put that same amount to, XRP or XLM or Cardano or VET, and they went up a little bit versus the other one, it's like, that's always been my consideration. My last question is, every time you look into people's YouTube channel and things like that, everybody says, do your own research. That's what everybody says. Where do people go to do their own research other than YouTube and Google? Or what do you suggest for somebody that's new to the space? What does that mean when people say do your own research? How do you even find those information? Because
I think that is an incredible question, young lady, and I will kick this off. Everybody comes to this space with a different set of skills, a different level of existing knowledge as it pertains to the capital markets, we'll just call it financial literacy. Okay. Everybody comes with a slightly different level of financial literacy.
Right.
Doing your own research means do you understand what it is you're looking at? And how can I get a better understanding of what I'm looking at? So I'll break it down real quickly. In the case of XRP and Ripple, there are use cases in the flow of money as it pertains to institutions. Well, that's something I have an understanding of because I've lived my life using banks, having checking accounts, having businesses, and I've even had to move money from the United States to Ecuador and Ecuador back in the purchase of products. So I understand cross-border stuff. And it's a pain in the ass. It's expensive. And these guys promised that they could do it better, cheaper, and more securely. Well, that was what they promised. So now I've got to go look into, are they selling me a bunch of BS or is what they're saying true? Okay, you'll read a white paper. I'm reading the white paper. 9 out of 10 words I do not understand. I now have to go to a dictionary, and every word I don't understand, I have to read and I have to learn the definition of it, and I have to understand it and put it into context. That's doing your own research.
Okay.
It's the whole process of learning, and in some case, learning how to learn. And we do it with each other. It's always best when you share these passions with a friend or a community. And I think that's why Twitter is so crypto Twitter is so attractive. I think that's why so many different YouTubers who are open and welcome the community into their lives as they're a part of it and interact like we're doing here right now. They gain traction. The same with the groups that are on Facebook. Together, we bring what we're learning and we share with each other. And when we leave, we're all a little more learned. We all have a little bit more information when we leave the table than when we came to the table.
Right.
That's doing your own research. At least that's a definition that I feel comfortable going and recording, and having on air.
Right.
Bryce, you want to contribute anything to that?
I would just say knowing what you hold, and if you have confidence in it, you can sleep at night, right? If you're relying on someone else's information that they're giving you, then you're a lot more vulnerable to the market cycles. But if you really take the time to, when I share it with other people, I have to actually back it up with, here's the article, here's, break it down. So I would encourage you, if you're watching a YouTuber like myself, I try to leave some information in the description below, or, definitely fact check things.
So is there a specific way you do it as far as, whether you go on Google and you put, I've heard people say put PDF on your search for things to pull up. Something specific like that, does that?
That's a good technique. Yeah. Like for instance, if you wanted to read the XRP Ledger white paper, typing in XRP Ledger white paper .pdf most likely will take you right to the PDF, as opposed to 5 or 6 maybe articles that were written about the white paper, but they're not the white paper.
Right. Okay.
You know what I mean?
All right. Yeah.
Oh, look at this one. Here's a great one. So you asked me this on your stream the other night, and I'll tell you one of the things that I found very interesting when I first came to this space, and that was my actual knowledge about economics was lacking. And finding Mike Maloney's The Hidden Secrets of Money not only made it easy for me to watch 8 separate 45-minute episodes, but the information contained about the history of money, about modern monetary policy, about how currency is created, how inflation is created, how deflation can occur, all these type of economic forces which we all live under. I started to understand these terms that I was hearing on television and I've read in books. I was starting to get like, and that's part of it also. You know what I mean? Here's one right here. This was recommended to us by Nick Black today on his live stream. Harry Hazlitt's Economics in One Lesson. Now, it's kind of deceiving because if you go to YouTube, it's a 6.5 hour lesson, but it is classic in that it kind of comes from a root Austrian type Milton Friedman kind of context, which is kind of sound money management, sound fiscally responsible economic planning.
Okay.
Really good stuff. Any last questions from the audience for either Meta or Crypto Ice before we shut this sucker down for the night?
Well, it's nice to meet you, Mr. Ice. Sorry I had you mixed up earlier, but it was nice meeting you.
Nice to meet you as well. Thank you.
Yeah, and thank you for having me, Jerry.
Excellent. I'm really glad that you reached out to me. I'm going to close on this note. The community that we're all a part of is going to have some real shitbags in it. That's just the truth. I'm willing to walk away from the shitbags. However, there are so many wonderful people, right? People who are honestly engaged in a process of learning, who maybe have some incredible expertise in one area, but they're learning about another, and they're able to cross-section and share these things. And together, right, by sharing, we lift all each other up. And every single one of us walk away a better investor. And I can't think, or a better human being, right? I can't think of a more admirable, honorable goal to have than to add value to the lives of every person I interact with and allow them the opportunity to add value to my life, right? To be open to that. So I'm a student, I'm a teacher, I'm a father, I'm a son. You know what I mean? I'm just a member of the community, but I'm also somebody who has a voice in the community. Well, all of you provide that for me in some way, shape, or form. And I'm truly grateful, and I want to say thank you to everybody in the stream, to my guests Bitta and Crypto Ice. And I want to welcome you to leave, if you're watching this in the replay, leave a comment. If you're watching this live, don't leave without hitting the like button. Come on. If you haven't subscribed, give me a shot. I got a pretty diversified channel between interviews with some of the most incredible minds, not only in crypto, but in finance overall.
Right.
I've got my little insights that I do, my little 10, 12-minute pieces of info, and I got my Beyond Moon channel, as well as the playlist for these live shows. There's a lot on my channel to go through. So on a Sunday when you're bored, go look at something I did a month and a half ago or 2 months ago. You might get some value out of it. So on behalf of Crypto Ice, I've had some really good ones. And on behalf of Bitta and Jerry from Costa Rica, good night, everybody.
Thank you all.
Good night. Bye.